Now let's see this transaction right here, which says on 12th January 2024, we have received the cash in advance from Abu Bakr. Now, who is Abu Bakr? Abu Bakr is our customer. Now, we are receiving 378,000 in advance. So why the customer will pay us in advance? Let's think that. Because we have to supply it something in future. So that's why he's paying us in advance, and that consignment must be bigger than the advance, right? So in the very next transaction, we can see that he have also given us the sales order of this items. So 12 Corolla windscreens, Civic headlights and filters, which makes the total to 652,000, which is almost the double of what we are receiving in advance. So how do we receive the payments in advance? Let's see. And before seeing the advance entry, let's consider it according to the accounting standards. Some people receive it as a credit in QuickBooks, but that's not recorded as a liability. According to the proper accounting treatment, whatever you are receiving in advance from customer is a liability on us. We have received the cash, but against what? We haven't provided anything to the customer yet. So either in future we will deliver the inventory or we have to return that cash. So that's why it's a liability for us. And I'll show you the proper treatment of it. So what we have to do is I'll open the chart of accounts, and from here I'll create a new chart of account under the other current liabilities. So as we can see here as well, that it says retainers from customers. Retainers from customers can be recorded in other current liability. That means this is the right treatment. So let's mention the customer advances here. We will not enter any opening balances, save and close. And let's go back to the home tab. Now what we will do is we will create a sales receipt for it. Now you might be thinking that it's for cash sales, right? So let me tell you that there is no direct treatment in QuickBooks. So we have to play other way around because we have to be right in the accounting treatment. The other method, I'll also show you how the people enter it. So enter the sales receipt. I'm receiving the cash from Abu Bakr. And I'm depositing it in cash as well because I want to directly keep it in cash. So let's put cash here, and the transaction is of 12th of January 2024. So 12th of January, and we are receiving the customer advance. So right now here we have the items area. So what we need to do is we will create a new item, and that could be a service item, and we will write here customer advances here in uncategorized, and I'll link it to the customer advances section. And that's it. You can also mention the customer advances here as well. Let's click OK. Now let's mention the total amount directly here. That is 378,000. So let's save and new, and let's go back to check the journal entry effect. Now, like I said, debit should be cash and credit should be customer advances as a liability. So I'll go to the report section and click on transaction journals. So exactly we can see here that cash is debit and customer advances is credit as a liability. So this is how you can deal with the customer advances with the proper treatment. Now let me show you how usually people do it in QuickBooks. What they do is just receive payment directly from customer. They consider it that they are receiving the payment. So alright, let's create a new customer, let's say ABC, and we are receiving the amount, let's say 85,000 in advance. So it will show you that this customer didn't have any pending invoices, so we are receiving the payment. So how I want it to be used? You can refund the amount to the customer, or you can leave the credit to be used later. So what they do is leave the credit to be used later and save and new. So payment credit will be created. Click OK. And now when they create the invoice, they can settle this credit. It's very easy. But if you go back, and this is our entry. So I'll go to the reports and click on transaction journal. Now it's showing you cash is debit, but why account receivable is credit? We don't have any account receivable here. So when it reduces the account receivable, it will affect the total amount in the balance sheet. It will deduct it as account receivable amount, which is wrong because that is a customer liability to us, not the reduction in receivable. So that's the main problem. Okay, let's see the next step. After that, if you are, let's say, creating the invoice for that customer, Let's say for ABC, we are selling him some item, and this makes the total to, let's say, 85,000. So if I save and close, it will ask you that we have the credit available. Do you want to settle it? Yes. And we can check it and done. So ultimately the problem will solve. But for the short term, if you're talking about the correct treatment, this is the correct treatment like I showed you before. But if your company is following this procedure, you can also do the same. It won't harm you in long term, but in the short term, the entry would not be correct. So let's be careful to delete these entries. Make sure that you have the right customer selected, otherwise you will accidentally delete some other entry. Let's delete this one, and let's go to the create sales receipt as well, and let's find for the appropriate entry. I think it's deleted. Let's check in the customers. No, we haven't deleted it. So in the ABC we have 85,000 and we can see all the transactions here. So let's select the payment from here and delete it. Only then we will be able to delete the customer altogether. So guys, this is how you can deal with customer advances with both the methods.